Welcome back to Out of the Rough. My name's Fred Arnold, and very fortunate to have John Gardner. John Gardner is with Farmers Insurance Group.
That's right.
You are a professional when it comes to different types of insurances, amongst other things. A couple things some people don't know about John, and he's an agency owner. 20 years experience in the business, so you're up there right with me. I just celebrated 20 years.
Congratulations.
Yes, 2005. Santa Cruz Small Business of the Year with the Chamber of Commerce. In the last 3 years, you've been very involved in the Chamber as the Ambassador Chair.
Correct.
And that's terrific. Plus, you're one of the top recognized agents and farmers for your professionalism and your hard work over the last 20 years.
Yeah, it's been a good ride.
Welcome to the show. I want to talk
Thank you.
the first session of our show about insurance for mortgage lending. Many times borrowers will come in to me and ask me, I need to get auto insurance, homeowners insurance. What is it? What is entailed in homeowners insurance when you go to buy a single family house?
Well, it's a good question, and actually homeowner insurance covers more than just the structure itself. That's what you as the mortgage broker or the bank is looking for. They want to make sure that if something happens to that home, effectively the bank owns that home, so they want to make sure it's protected. So it covers the structure, and it covers for the obvious things like fire, wind damage, water damage, some of the things, any number of those different things, smoke damage, so even if you're not near a fire zone, you can still get smoke damage.
In some cases, if your toilet floods.
Yeah, anything that's, especially, it's funny about the water part because it's a little misunderstood, and the water part has to do a lot with what they call sudden and accidental. Basically means if something suddenly happens, it's probably covered, but if it's like a leak over time, most likely something like that's not going to be covered. But the banks are looking for that. There's also, it covers your personal belongings. So if anything happened, if things were stolen or damaged by the water, your furniture perhaps, or valuables were stolen, that's also covered by the homeowner policy. Homeowner policy has a coverage that most people don't think about, and that's what's called loss of use. And that means, so something happens to my home. Well, I still have to pay for the mortgage on my home, but meanwhile I have to go live somewhere else, or I may have to move my items out and put them in storage. Well, that cost is covered by the homeowner insurance as well. So that's a standard piece. And then the fourth key piece is liability. You come onto my property and my dog bites you, I'm responsible. Or I had a great story where a kid was playing with a Wii and threw the thing through their neighbor's TV. Actually threw it through the neighbor's TV and broke the screen. That's liability. Those are the things you don't think about, but are covered by your homeowner policy.
They didn't have the strap on.
No. All the safety warnings didn't apply.
You host an event or party or get together and someone trips because the concrete's raised in one area.
Absolutely, and you don't have to necessarily be at fault, but if something happens at that location, you're still held responsible.
Yeah, and they're going to possibly look for you to pay for the damages, and you're covered when it comes to that. Now, a lot of times, there's a lot to look at when it comes to insurance. One is just the basic coverages. What are some of the basic coverages? It's usually replacement cost, or tell me more about how the coverages work as far as replacement costs.
Okay, so here's what happens. Let's say you have a loss. Your home may be 30 or 40 years old. We can't put a used roof on your home.
Right.
It's hard to find it. It's right. So anything that's replaced is replaced new. We can't buy you an old sofa. Most companies, what they'll do is they will give you money for what the old sofa would have been worth. You go out and buy the new sofa, you show them the receipt, and they will reimburse you the difference, provided it's a similar sofa. And it's the same thing with the home. If you decide, let's say you have damage to a wood floor after a water loss, the insurance companies are going to give you money to repair that. But what they're going to do is they're going to hold back a little bit until you actually make the repair. When you make the repair, they give you the difference, so the full replacement cost. So essentially what happens is you're whole. Minus your deductible, you're whole again, and that's really the reason for having the insurance, to make sure that nothing financially devastates you to the point where you can't recover.
Let's talk about your the part you have to contribute.
That's the
deductible, right?
Yeah.
Deductible. So there's different amounts of deductible?
Yeah, you can select on any kind of insurance, typically there's a deductible option. Most homeowners get a deductible option. Usually it's $500 or $1,000. Some now, as things become more expensive as a way to save money, people are looking at possibly raising their deductible. Especially if you're buying into a newer home, the chances of something happening are minimized. So realistically, buying a higher deductible lowers your premium. And a lot of times you can look and say, in 3-4 years, if you don't have a loss, you've recouped all that back, that difference in deductibles back by having the higher deductible. And that's one of the things that when we work with clients, or any insurance agent works with clients, is they go over the deductible to kind of explain how that works and basically how much risk are you willing to take on, and you don't have to pay for that low deductible. There may be an option that's better for you.
Earthquake, separate? You got to pay separately for it?
Yeah, earthquake is not included in a standard homeowner policy. The earthquake policies now don't give the same coverage. Those who were around during the 1994 earthquake, most people had an opportunity to really improve their houses at an incredible opportunity. The earthquake policies are out there now, have really high deductibles. They're 10 or 15% of your building total deductibles. So your average house, maybe $350,000 for a replacement. You're dealing with a $35,000 to $50,000 deductible. So very different.
And I'm okay with that if my house is owned free and clear and it's substantially destroyed.
Exactly, and in fact, the more equity you have in your home, the more likely you're going to want to carry earthquake. But even the cost is more expensive than it used to be. But realistically, the idea, again, going back to what insurance is there for, it's really there to help you withstand a loss that would financially devastate you. So do you want to pay a $35,000 deductible? Absolutely not. But do you want to pay a $350,000 cost to rebuild your home? You're much worse off. So having the earthquake gives you the opportunity.
Perfect. Let's talk about one last thing, and that is condo insurance. You buy a condominium, you pay an HOA fee, homeowner association fee.
Right.
There could be a loss within, it's called walls-in policy.
Yeah, this is one of those situations where the homeowners insurance homeowners association has rules, and they're called CCNRs. And in those rules, they list what you're responsible for as the unit owner and what the association is responsible for. Commonly, what happens is many associations are going towards where you as the owner are responsible for what happens on the inside. Now, traditionally, it was always, well, if my condo burns down, not a problem. The association will rebuild it. Well, that's fine, but they're going to rebuild it to the studs or maybe to the walls. But you're still, in many cases now, responsible for the fixtures inside, the cabinetry, the flooring, anything that's permanently attached. So not only can you get a policy that will cover that, and that's why the condo policies are important, but some of those other coverages I mentioned under the home as well. For example, your belongings are covered by a condo policy. The loss of use, you still have to move out. Where are you going to live? How are you going to pay for it? All those things are still covered by a condo policy, and the liability piece as well. So there's similarities. Most mortgage companies now are actually asking you to carry this coverage, where before they were only concerned about the structure. Now that they know homeowners associations are asking you to be covered for the interior portion of it, they now are asking for this coverage as well. So.
Yeah, and I think it's a good thing to have because of liability. And what if you significantly upgrade your condo? So it's important that you look at that. Yeah, absolutely. Yeah. We're going to jump to a quick break, but when we come back, we're going to talk about the different types of insurance that John's company offers and how to save the most on your insurance policy.